We've all seen these startling clips from the news and social media lately. But it's not just Main Street that seems to be in incredible moral decline, it's also Wall Street. And if we analyze these two things together and connect some dots, I think it'll give us tremendous insights as to when everything will collapse. And unfortunately, I think it's going to be very soon. I'm going to explain this to you in 3 simple, fast steps. Step number 1, let's go over cycles and moral hazard that has been created by the government, the central planners, and the authoritarians. We've all heard the saying because it's extremely true. Hard times create strong men. Strong men create good times. Good times create weak men. And then that cycle repeats. Those weak men create hard times. Throughout this video, I want you to use that as a framework. So let's dive right into the whiteboard and go over not necessarily a chart, but this is more a visual representation of an idea. So we go all the way back to, we'll call it the mid-1990s to 2020. On the left, we go from 0 to 10. Now, all this represents is how significant or how bad the moral hazard has been getting. Okay, so in my view, I think that you had, let's just call it 1 or 1.5 on this scale of moral hazard. Not just within society, but let's just focus on Wall Street right now. And then you had the bailout of long-term capital management. Well, this significantly increased the amount of moral hazard, and then it continued to go up. And each time we had more and more of these bailouts, it goes up to a higher degree, but then it continues on an upward trajectory. We go through the dot-com bust. What happens? Well, Greenspan drops rates because he wants to create, as Paul Krugman said, another asset bubble in real estate. Then we have the GFC. We have all the bailouts of AIG, the big banksters themselves. And then we have quantitative easing 1, 2, 3. Everything the central planners have done insinuates, if not explicitly states, that they are there to back up the financial system. They want asset prices to go higher and higher and higher. It's almost like we've got the Fed and the government right here, and we'll use your drunk, insolvent Uncle Sam to represent both of them. And it's almost like going back to 1998, your drunk, insolvent Uncle Sam has said, we will be right there to bail out the financial economy, but the real economy, Main Street, be damned. Because we have to focus on one, and if we focus on financial assets, then we'll have this trickle-down effect, and that's the best we can do. But again, they ignored the moral hazard that this created within financial markets, and I think we have seen that seep out into Main Street and society as well. But now we need to zoom out even further and realize that all of this is happening while at the same time we're going through one of these mega cycles that they talk about in the book, The Fourth Turning. And we're at the very end of a fourth turning right now as we speak in the 2020s. And in my opinion, the fourth turning is just another way to represent this saying that we discussed at the beginning of this video, with hard times creating strong men. But right now, I think what we've done is we've gone from good times, let's call it in the 80s and 90s. Well, these good times have created weak men. And obviously, when I'm talking about weak men, we're talking about society as a whole, which would include Main Street and Wall Street. And now we're going into this period of hard times. While at the same time, we have all of these bailouts that are creating a higher and higher and higher degree of moral hazard. So then the next question becomes, well, what happens if we are rapidly approaching the hard times while moral hazard is going completely off the charts? Well, a very easy way to tell that this is happening is just look at the past couple years with the average Joe setting up his portfolio. And his main investment strategy is pretty much summed up by YOLO. You only live once. And this is just a small anecdote that illustrates the underlying condition. The key takeaway here is that today, in 2023, we've come to a point on Wall Street and on Main Street, therefore in society, where bad decisions have no consequences. In fact, the worse decisions you make, sometimes the bigger benefit you have. As an example, let's look at all the shoplifting and theft that is running rampant right now across the United States. This is a bad decision. But is it? In the eyes of a thief, it's a very good decision because you can walk into a Target and walk out with whatever you want, and you know that there aren't going to be any consequences. It's the same thing with student loan debt. Right now, you can take out $100,000, $200,000 to study any worthless major you want. And in fact, you're going to pay that $200,000 to get indoctrinated into a woke ideology. But are you going to have any consequences? Absolutely not, because the government is going to forgive the debt and most likely give you more and more stimmies in the form of UBI. What's not to like? But it's not just the poor, middle class, and students. It's everybody. Let's look at PPP going back to 20 and 2021. This was basically just student loan forgiveness for business owners on mass scale. Now, it is true that when the government comes in and forces you to shut down the business, you should be compensated. But let's be honest, the majority of those PPP loans went to business owners that just used them to go out and buy Lamborghinis. But what trumps all of this were the bad decisions that were made by the government, the politicians, and the central planners that they will never have to suffer the consequences for. We all know what happened with the lockdowns, the medicine, the mandates, etc. And if you look at this rationally, now with hindsight being 2020, or even if you looked at it while they were doing it, for heaven's sakes, as Brett Weinstein accurately points out in his recent podcast, they violated on numerous levels. They actually violated the Nuremberg Code. Okay, well, we know what happened to people that did that back in the 1940s. Do you think today's politicians are going to suffer the same consequences? Absolutely not. What we have seen is they have actually gotten more votes and gained more power as a result. I would point to Justin Trudeau, Gavin Newsom, Joe Biden, Anthony Fauci as prime examples. Step number 2. Let's see how everything we discussed in step number 1 has been playing out in Wall Street. We start by looking at a chart going all the way back to August of 2022 to April, or just past April of 2023. On the left, we go from $0 up to $15. This is a chart of Bed, Bath, and Beyond. And we're going to use it as a proxy to illustrate the moral decay that we have seen, and that's putting it lightly, that we have seen in financial markets. So we start, this red line here indicates the price right around, let's call it 13, 14 bucks. It plummets, it's gone all the way down. It jumps up and becomes very volatile. What I really want you to focus on is this spike right here around February of 2023. Why is this so important? To get some more insights, let's cut right to a clip from a recent interview with Jesse Felder and Ben Hunt from EpsilonTheory.com.
At this point, Bed Bath & Beyond is selling worthless stock directly to the meme investing public. This is post Ryan Cohen. This is post any sort of short squeeze. This is just saying, hey guys, when Hertz went bankrupt, their common stock actually popped a bit. So, hey, who's to say the same thing wouldn't happen for us when we go bankrupt? we're going to have this institutional investor. They believe in us. They're going to come in and they're going to buy. We're selling $1 billion worth of our stock. Well, they've already agreed to buy the whole thing. They've already agreed to buy it all. The whole deal was for Hudson Bay to buy warrants, preferred stock from Bed Bath & Beyond, and then immediately turn around and sell it into the open market as common stock. Hudson Bay gave $360 million to Bed Bath & Beyond. So that's cash for equity instruments. Hudson Bay turns that around into at least 300 million shares of common stock, which is sold into the open market. Average price right about $1.50. Right, so they pulled out $450 million. So $90 million in profits, 25% return on their investment for a 2-month bust out. It was all there. I mean, it's all publicly filed.
So basically what happens is the management team for Bed Bath & Beyond sees one more opportunity to scam the average Joe, the average retail investor. And what they do is they know darn well that they are basically bankrupt. They're on the brink of bankruptcy. They can see the writing on the wall. But what they decide to do, because they know there's such an appetite from these YOLO traders, that they take $1 billion worth of shares and they say, hey, retail traders, why don't you go ahead and buy these $1 billion worth of shares? And initially you would think that the investors or the retail would say, oh, no, we don't want anything to do with that. So what they do to sweeten the deal is they create a story to scam these people out of their money. So insert the next character in the story, Hudson Bay, this hedge fund. So what the management team at Bed Bath & Beyond does is say, hey, Hudson Bay, if you agree to go ahead and buy, I don't know, let's say 200-300 million of these shares. And they don't have to be specifically in shares. We'll structure it in a way, maybe warrants. So it's basically impossible for you to lose money. So now we can take this story, go out onto CNBC, and we can sell it to the general public. They'll buy the rest of the shares, and as the price is going up, then you can go ahead and sell the shares that you now own at a huge profit. We'll go ahead and do the exact same thing, while at the whole time knowing that the company is basically bankrupt and knowing that they are going to scam the retail investor out of every dime. So I know right about now you're probably scratching your head and saying, how on earth can this happen? How can these people be so morally bankrupt? And how can, we'll call them YOLO Joes, how can the YOLO Joes be so stupid to just buy, knowing that they're buying into all the selling from the scam artists?
I am buying the market right here, right now, because I know more than anybody.
Well, to understand this dynamic, we've got to dig a little deeper. So my good buddy Jeff Snyder, most of you know him from Eurodollar University, always talks about how just because money's cheap doesn't mean it's loose. And to take that one step further, I would say at times of cheap money, money will be loose for certain people, certain entities, while it will be tight for other entities. And this creates a completely distorted set of incentives. And if you layer this over the top of the cycles and the increase of moral hazard, you can see how this plays out, not just with Bed Bath & Beyond, but how it's played out on Wall Street going all the way back to 2008. Let me show you specifically what I'm referring to. So before, when the strong men were creating good times, we would have the banks that would create credit and they would loan money to the businesses. Why would they do this? Because they knew that the businesses would go out there and they would produce more and more goods and services. So on my whiteboards, when I depict a simple economy, I always try to get people to envision an economy that simply produces corn, cows, and cotton. Sometimes we throw some wheat in there as well to mix it up. But that's a very simple economy. So the banks are lending to the businesses, the farmers, let's say, to create more goods and services. The more goods and services that are created, the richer society is. And I'm showing society as the average Joe making more money, but really the definition of wealth is not money, it's not gold, it's not Bitcoin. It's simply how efficiently a society can create goods and services. And if they're creating more goods and services, then by definition, they are wealthier. If they're creating fewer goods and services, then they are poorer. But now we need to realize everything has changed. So what we talked about in step number 1 is the central planners, the Fed, the government, bailing out the system. But remember, they didn't bail out the real economy. Absolutely not. They were specifically bailing out the financial economy. So this sends a message to society at large. Basically, it's if you are too big to fail, if you're in the financial economy, then we won't allow you to fail. But if you're in the real economy, if you're an entrepreneur that's out there trying to create more goods and services, then we could care less if you go bust. So let's think this through. The banks now look at this type of lending and they say, no. There's way too much risk there. You see, what we can do is we can just lend to megacorporation, and megacorporation can take that money, they can buy their shares back. Now the fat cats, well, they all get rich. The banksters and the people on Wall Street, the scam artists that are running Bed Bath & Beyond as an example, they're all going to get rich while the average Joe is going to get poorer. Why? Because we're not lending into the creation of goods and services. We're only lending to financialize the economy. So why would they do this? Because now the risk reward for just lending to megacorporations to buy their shares back makes a lot more sense than lending to good old-fashioned businesses to create wealth for the average Joe or society at large. So what do you expect YOLO Joe to do? When he looks at this and intuitively he realizes that the only shot I have is to gamble with all these stimmy checks that are coming in. And if Bed Bath & Beyond wants to sell me some shares that I know are worthless, I don't care, because I'm going to buy them and just keep my fingers crossed so I can double, triple, or quadruple my purchasing power, or I can go flat bust, and I'm going to go ahead and take that risk because I don't have any other choice. It's almost like whether we're talking about Main Street or whether we're talking about Wall Street, nobody knows up from down. Nobody knows what's right or what's wrong. And unfortunately, it seems like very few people even care. Whoa, time out. I also want to bring to your attention something that's going to absolutely shock you. So I hope you're sitting down for this one. Editor, go ahead and throw up the chart. And what we can see is that between 2010 and 2019, the only net buyer in the stock market was corporations buying their own shares back. In other words, the only reason the stock market went up was because of financial shenanigans, because these megacorporations were enriching themselves at your expense, courtesy of the Federal Reserve, the government, and the central planners. Step number 3. Most of us realize we are in a time of weak men creating hard times. If you don't believe me, just look at this chart. We go all the way back to the late 60s to today's date. On the left, we go from 2.5% up to 15%. This is a chart of unemployment, and it's very volatile when you look at long periods of time. But what I want you to focus on is the fact that unemployment today in 2023 is at a historic low going all the way back to the late 1960s. Why is this important? Because let's also remember that theft and shoplifting is at an all-time high. Look at Target. They just came out and said that they are expecting a $1.3 billion loss due to theft. We see the same thing with Dollar General, and I'd like to point out that just the other day, Lululemon fired 2 of their employees. Why? Because they actually tried to prevent someone from stealing merchandise. That's the world we live in today. I think a good summary of what we're seeing in the United States and in the Western world in general is a tweet that I just posted the other day, and it was based on my recent experience of going back to the United States. As most of you know, I don't spend much time there anymore. And I've noticed it's a lot like looking in the mirror, where if you do that every day, you don't see changes. They're very subtle. But if you only look in the mirror once every 2 years, those changes become very obvious. So when I went back to the United States, I saw a huge decline in respect for rule of law, private property, and overall civility, while I saw a massive increase in mental health issues, likely due to drug use, tribalism, narcissism, and overall anger. Everywhere I went, people were on edge, and it seemed like they were on the brink of snapping. But we still have to answer the question, when will everything collapse? And there's no better person to go to for insights than my good buddy, Doug Casey. This is from a recent post on internationalman.com, talking to Doug Casey on rising crime, basically legalized shoplifting and other disturbing trends in the United States. Doug says, the real problem is that the moral fabric of the U.S. and many other Western countries is torn. There's not much of a moral compass left. It's no longer clear to the average American what is right and what is wrong. Right and wrong is now viewed as arbitrary social constructs. Property rights are barely even seen as rights, which is perverse since the very concept of rights is based on property, starting with your own body, which is the most basic form of property. And we see this lack of respect for property rights playing out, whether it's people punching each other at an airport, stealing from Target, or Bed Bath & Beyond stealing money from retail investors. Doug goes on to say, this degeneration is understandable in a world where black is white and wrong is right. It's become unclear in many people's minds what is man and what is woman, and what the difference is. If there's no recognition of something as basic and obvious as that, the meaning of words and any logic in thought becomes meaningless. So, of course, they have trouble understanding concepts like right and wrong. Now, Doug looks at this through the lens of business, or like we said on the whiteboard, creating wealth, more goods and services. Increasingly, business itself makes no sense. With the amount of taxes and regulations an entrepreneur has to deal with, combined with the fact that you're getting no defense from common criminals, what he's basically saying is, why on earth would you start a business? The answer is you wouldn't. And if we have fewer and fewer businesses being created, we're going to have less stuff being created. Therefore, the overall wealth of society declines. If we have wealth declining, the standard of living going down, while at the same time, people cannot differentiate between right, wrong, up, down, black, white, man, woman, whether they're on Main Street or Wall Street. In my opinion, by definition, society has already collapsed. And unfortunately, it's going to get a lot worse before it gets better. But the good news is this is all cyclical. Remember, these hard times will create the strong men that in turn will create the next round of good times. For more content that'll help you build wealth and thrive in a world of out-of-control central banks and big governments, check out this playlist right here. I will see you on the next video.